Welcome to the live daily analysis with Elite Currency, free of charge for February. We're taking a look at some interesting currency pairs right now. First of all, though, be aware of this risk disclaimer. Please pause the video to read the entire disclaimer. And by continuing watching this video, you are aware of the risk involved when trading. All right, time for an update on the long-term time frames. We didn't do that for a while, but of course it does take a bit longer for those time frames to develop. We were keeping an eye on those, but we really didn't see much of interest as yet. Things are a bit changing though at the moment, and that's why I want to make this video. Looking at the euro pound, for instance, is one of them. Euro definitely showing some good bearishness at this moment as we speak on the 4-hour chart. Let me zoom in just to give you the broader perspective of the daily chart. You see strong uptrend, but recently the euro pound has made a very interesting bearish momentum and a hook back that looks very much like a head and shoulders pattern. If you look at the blue circles, left and right shoulder are not totally in sync, but still I think it's a valid pattern. And if you look at the neckline, well, it's not the neckline, but the support trend line, I should say, because the neckline depending on where the shoulder is exactly, but you could say the neckline is somewhere around here. So that is the neckline, but the support trend line though about to be broken, which is also important, and price going through the long-term moving average. As you can see, long-term moving average indicating the downtrend, and here the uptrend nicely here. So it's a good indication of the long-term trend, and you can see that we're about to switch. We're about to push through. So, and this is the second attempt, don't get me wrong, there has been previous attempts to push through it, but still there was a bouncing spot that occurred actually here and here and here. So what is important to note is the support of the first attempt to break through it. When that breaks, there could be a bigger downside to come. So from that point of view, it's important to keep an eye on this green line and the neckline as well. In the meantime, though, I think there is a potential to fall down to that support. And then, of course, if that support breaks, then there is more potential for a real reversal. For the moment, this is still a retracement within the daily perspective. 4-hour chart, though, you can see the opportunity, I think, from the 4-hour perspective to fall down to 83.60 and perhaps 83 and then perhaps even 82.25-ish. Those are the zones to the downside. And you can see that we're in a nice downtrend channel on the 4-hour chart as well. You can see that there are nice lower lows and lower highs. A blue line is not so good for resistance, so let me make that quickly orange. And you can see that the channel, drawing a channel is a bit difficult, so we can do it like this. This has 3 touches. That looks like a good base. We can connect it to the bottom of that channel, which is about here probably. We'll make it parallel, so you can see there's still some space down to that bottom of the channel. Now, at this moment, price is at or below, I should say, the 3rd level. If you look at the sequence level, this is 0, 1, 2, 3, below the 3rd, up to the 4th, and then to the 5th. That's where we can expect the most momentum. It's breaking below the 3rd. So let's take a look at the hourly chart right now, and you can see that indeed there's a good potential there to fall. Now, this is one push so far, so I'm not interested in trading it right now. What I am interested in is if price makes a bit of a stall. I would even put a fib from here to here, probably. Or let me check the hourly chart again and update that a bit. Let's see if that is the best fib. We can put the fibs on this particular swing high and see where we could put the fib maybe on the best spot. And I think it could be even valid on the hourly chart to use that particular high and use the low. This could be the low, of course, but we don't know. It could even fall further. So we'll have to move it accordingly every time it makes a newer low. But from this perspective, I would probably even use this fib on the hourly chart. That's not much a long term, I know, but I think it's the best one at this moment. But you could also still use the entire top. And we could put that one on as well and see where there's confluence. Of course, once again, you got to update the fib wherever the retracement occurs. I'm not sure if this is the spot. It could be lower, don't get me wrong. The retracement, I think a good spot could be 84.50. We got bottoms in here. 84.50 looks good, or 84.75. Those two look like good areas for if a retracement does occur, that price could bounce. So 84.50, 84.75 with the target at 83.60. And the stop loss would have to go, I think, above 85.14. So at the minimum, even 85.90 if you want to be very safe. So that's my idea, but I have to admit the price is very bearish at the moment. A lot of momentum. It might not make the retracement. It might just fall right smack down to the target. In that case, this particular analysis is invalidated. I would reanalyze it. And what I would probably do is see how price responds to this level. If I do see an hourly bear flag with 13 candles going like this, it could be set up well for another break down to 83. All right, so that would be my backup. But this particular fib is only valid if price does not hit 83.60 or come within 25 pips of it. So 83.85, once it hits that 83.85 level, I would, then this momentum has just broken in one shot and nothing we can do about it. Euro yen daily chart is also showing bearish momentum. I am kind of interested in to see if price would bounce by any chance at the 38.2 fib. I've been keeping an eye on this for several days now, and I was looking at the 88.6 fib and minus 61.8 target for a bounce. And I just wanted to tell you that if I see a strong bullish candle here, that I would go long on that. But in the meantime, in those few minutes that I wanted to present to you, this is actually breaking lower. So I think that's invalidated this trade idea at the target. I was thinking about a pending order, but I decided not to, and rather wait for a bullish candle. And you can see that sometimes that's very useful to do. The reason why I did that, because euro dollar was so bearish. See the other video on the euro dollar pound dollar, but also the dollar yen, is showing some correction here and is not fully in an uptrend as yet, although I think it's close. So from that perspective, I think it could be better to not to look in the euro yen at the moment. Of course, in that case, there could be space down to the 50 fib. I will turn my hat around, in fact, and say, well, there could be space down to 118.30 at this moment, and a breakout continuation down to that 50 fib. So from this perspective, a push, as you can see, the momentum is occurring, so I would be looking for a new triangle pattern like this and a break of that pattern for downside to that 50 fib. Next on my list is the dollar CAD. I'm looking for basically a break of this, or it actually already broke. You can see this particular pattern occurring, which is a falling wedge, and that is a bullish reversal signal. And yesterday did have a daily candle poking through that reversal chart pattern. So from this perspective, I think it could be interesting to look for continuations on this dollar CAD. Now on the 4-hour chart, it doesn't look that grand because price is still kind of relatively choppy, I would say. But yeah, the break is there. So I'm looking for continuation of that break. And I think that from this perspective, if I look at the 4-hour chart, let's put a fib from here to here, like this. I think a bounce at the 50 or the 61.8 fib with the stop loss below the low here, a few pips below, and targeting these minus 61 and minus 1,000 targets could be interesting. Now, if it doesn't get down here to these fibs, well, then I would have to probably look for intraday continuations. I would probably then wait, to be honest. I would just wait for price to hit the target, make a pullback to the EMAs like the 21 EMA, and look for a bounce around, probably move the fib again to the next high, and look for a bounce around the 38 or 50 fib for continuation. All right? But so two things. Either it retraces now, or if it does continue right away, I would just move the fib and wait for the next retracement. Why? Because it's still very, very careful in breaking these moving averages. I would like to see a break above it, but because this is the first this could be the first full break, and moving the moving averages into a bullish scenario, typically it moves back to test those moving averages and then bounce off those moving averages. So I'm not too worried about the breakout, because I think there's a high chance that price will have to retrace back to those moving averages before really going in a strong uptrend. For more updates, check out elitecurrency.com, sign up for our free tools, and wish you all great trading. Cheers.